Welcome to Anafram Market Perspectives.
Anafram Market Perspectives, Friday, July 11, 2025. Hello, and welcome to Anafram Market Perspectives. It's Friday, July 11. Markets are digesting a whirlwind week of tariff drama, global economic signals, and fresh volatility, all while marching toward the next wave of corporate earnings. Let's dive into what shaped the markets. S&P 500 weekly recap. The S&P 500 closed the week near record highs, despite mounting geopolitical tensions and inflation risks. Semiconductors led the charge, with Nvidia jumping plus 4.36% and AMD up plus 4.07%, reflecting persistent AI demand. Palantir soared plus 7.86%, while Microsoft and Oracle each gained over 2%. Financials were mixed, with JP Morgan down minus 1.30%, Bank of America off minus 3.57%, but KKR and Blackstone surged plus 6.84% and plus 6.33% respectively. In contrast, telecom and entertainment dragged. Verizon lost minus 3.58% and Netflix dropped minus 2.67%. In consumer discretionary, Tesla sank minus 1.83% as investors reacted to Elon Musk's political ambitions, while Amazon gained plus 1.06% during its extended Prime Day. The overall tone was bullish, but cautious, with pockets of defensive weakness. Trump tariffs and global trade. Trade policy took center stage once again. President Trump officially ended the 90-day tariff truce and unveiled a sweeping list of new levies: 25% on Japanese and South Korean goods, 30% on South Africa, 50% on copper imports, and up to 200% on pharmaceutical products, all effective August 1st. Negotiations continue, with the UK, Vietnam, and China securing preliminary agreements. Talks with the EU are ongoing, as Brussels tries to shield strategic sectors like aerospace and autos. Trump warned of retaliation if allies side with BRICS, deepening global uncertainty. China responded with procurement bans on European medical device makers. Meanwhile, OPEC Plus agreed to raise output by 548,000 barrels per day starting in August, sending oil prices lower and triggering fresh volatility in energy markets. Domestic fallout is already visible. Copper prices spiked, beef prices are expected to jump due to Brazil tariffs, and pressure is mounting on the Fed to interpret these inflation shocks amid internal division. While some Fed members urge cuts, Chair Powell remains cautious. Economic data recap. It was a mixed bag on the macro front. U.S. jobless claims came in better than expected at 227,000, with continuing claims stable at 1.96 million. Consumer credit growth sharply slowed to $5.10 billion, signaling cautious household spending. Crude inventories rose by over 7 million barrels, reflecting softening demand. China's CPI inched up to 0.1% year over year, while producer prices remained deeply negative at minus 3.6%. Mexico's inflation remained sticky at 4.32%, complicating regional rate expectations. In SIC and CD. Meanwhile, Canada's IV PMI came in strong at 53.3, indicating expansion. The Fed minutes revealed internal debate but no consensus yet on rate cuts. Meanwhile, Governor Waller floated the possibility of a July cut, suggesting that tariff-driven inflation might be transitory, a stance aligned with Trump's pressure campaign. VIX, Volatility Index. The VIX closed at 16.75, slightly down from last week but still showing low to moderate fear levels. While volatility remains suppressed, markets are on edge ahead of August 1st, when the bulk of Trump's tariffs kick in. The copper tariff alone has already stirred sharp reactions across manufacturing and commodity markets. Bonus section, ETF and stock picks review. Let's revisit Monday's 3 picks. XLI, Industrial Select Sector, SPDR ETF. XLI held above its Ichimoku cloud and closed the week around $150.70. Despite some consolidation, the MACD remains positive, and the ETF still rides the momentum from favorable industrial sentiment. If trade deals with the EU and India firm up, XLI could break higher. PGR, Progressive Corp. PGR showed modest recovery this week, closing around $249.35. After a long downtrend, it's now testing key resistance near the Tenkan-sen. MACD is turning less negative, and bullish divergence may be forming. Watch for earnings as a potential reversal catalyst. DAL, Delta Airlines. DAL extended its rally and closed the week at $56.81, continuing to hover above the cloud. Momentum remains strong, with a rising MACD histogram and supportive price action post-earnings. Travel demand and lower fuel prices post-OPEC Plus may offer tailwinds here. Investor takeaways. Markets appear resilient. Tech is leading, semiconductors are hot, and financials are trying to stabilize. But August 1st looms large. If Trump's tariffs are fully enforced, especially on copper and pharma, expect volatility to surge and inflation expectations to shift. For now, stay diversified, watch for Fed signals, and be prepared for sharp market reactions to geopolitical headlines.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives.